Beautiful. All right. If you guys are just tuning in, welcome back to another New York session live trading stream. If there's no live trades, what I'm going to do from now on is just go through market news and try to either go through a concept about fundamentals or macroeconomics, or just focus on high impact news. So today, obviously, Bitcoin is about to reach all-time highs. We have the altcoin market about to move, which is a major driver of the excitement. And so we're just kind of keeping an eye on these risk assets. Today is Tuesday. I believe Jerome Powell is speaking either today or tomorrow. Let me make sure I get this right. So today is ISM. So tomorrow, Fed Chair Powell is testifying in front of the House Banking Committee. No, Financial Services Committee. The Financial Services Committee is like the auditors for the government budget. All right, I used to work for a congressman back in the day that was the head of the House Financial Services Committee, and most of the time the staffers didn't want to go in, and so I would sit in for them and take notes, and I learned a lot about how government budgeting works, where most of the inefficiencies are, and also why that system has no oversight and no real accountability. The long story short, this is going to be potentially a market mover, depending on how long they grill Jerome Powell. But Wednesday is a much bigger deal than Thursday. Thursday, they're going to ask him the same questions they did before. So this is going to be our gauge to see how the rest of the week is going to go. So we have JOLTS jobs openings, the number of open and available jobs in the marketplace or in the economy. We have Powell testifying in front of the House Financial Services Committee. And then, of course, we have this ADP non-farm payroll. This is NFP, but instead of the government number that comes out on Friday, this is a number that the ADP Corporation releases. ADP is a technology processor that handles payroll for basically all the largest companies in the world, or all the largest companies in America. So they kind of have consumer data that's relevant, but they don't have enough of it because their numbers are always off. So I don't really care about the ADP number as much as Fed Powell's testimony and the JOLTS jobs openings. We talked about JOLTS on Sunday, referring to slack, meaning the amount of capacity that we're operating in compared to our maximum capacity. So if the maximum capacity for the US is 220 million employed people, we're operating pretty close to that, but we still have a lot of open opportunities for folks to take. All right. Let's take a look at NASDAQ. NASDAQ, much needed correction. I'm sure we can all agree that any market that moves in one direction, like the longer that a market moves in one direction, the more you can assume that a pullback is coming. And so as we're climbing and climbing and climbing and you don't see the correction, you start to get, I don't want to say concerned, but you start to second guess whether you should keep buying into a trend that hasn't, really pulled back or let off some steam. So personally, what I'm looking at here is this does look like a sizable correction. If you look at previous corrections of the same size, typically each correction on NASDAQ on the 4-hour comes in two legs. I don't want to go too deep into education, but you guys will figure this out on your own at some point. And then CA members, we can talk about this on Saturday education. You'll see like these impulsive waves. You'll have the first leg of the correction, false recovery, second leg, real recovery. Again, correction, false recovery, second correction, real recovery. So let's take a look here. You'll have a bullish impulse. You'll have the first leg correction, false recovery, second leg correction, and then the next impulse. Again, you have correction, false rally, real correction, and then another impulse. And so here, what I'm seeing is that we have this first leg of the correction. If it is a genuine correction, we should be getting this false rally, and then the next leg, and then the continuation. The only reason that pattern trading and structured trading is important, however, context, any pattern or strategy or confirmation system that doesn't take the context of where price is into account is a shitty system. Context means where are we located relative to the discounts and premium of NASDAQ. So right now we know the all-time high, which got hit today, is 18,342. So that's clearly the premium of the market. That's about as high as we've ever seen it. And this constitutes a very high price. If we look at this local structure right here, it's obvious that we have a point at the very top. And if we keep looking for structural lows and seeing which ones are the lowest, we can see that out of this local range, this is the lowest point right here. So I drew my range low to high. So you guys answer this question for me. Relative to this range that we've now identified, where this is the premium, this is the high, and this is the discount, this is the low. Where is price located relative to this range? Are we closer to the high, closer to the low, or closer to neutrality, which would be a stamp in the middle? All right, everyone says it's pretty. Actually, I agree with you, Roman. I agree with you. He said BTC barely broke all-time highs, but we're tracing. Guys, we talked about this for about 20 minutes on Sunday. And I know I make a reminder every Sunday not to have you guys know Dory from Finding Nemo? Don't have a Dory kind of memory because you can't make money in financial markets forgetting your trade ideas, every 2-3 days. So with Bitcoin, I said we're going to breach all-time highs, but that's where we're going to be seeing the correction. And now, if you guys were paying attention, why did I mention the Bitcoin correction? What was some of the reasons I said that when price reaches all-time highs, we're going to see a correction? Let me see who's paying attention here. Roman, I agree with you. We are actually closer to the middle than we are to the premium or discount. Okay, which is why it makes sense to buy it as opposed to sell, because the real sells are here. The best buys are here. But if the market is bullish, there's no guarantee we make it all the way back to the daily or the weekly discount before we continue. So then we look at these structural levels and say, okay, if this is the recent local low, and this is another structural support on the local price, and these are the best opportunities for buyers to get in. That means my goal is to enter as close to these lows as humanly possible. Okay, which is why I would be entering here as close to this discount as possible. If the market breaks this discount, do I buy at neutrality? No. Market comes into this range. Do I wait for it to get to the discount? Probably not. Okay, by the time that we break two of these levels, now the market might need the full push through before we start buying it. So the buy option is 17,887, or if the market breaks, I'll look for a buy opportunity at 17,444. Does this make sense to everybody? Before we continue, does this make sense to everybody? Shan says sell-offs and profit taking. Exactly. So when we talk about Bitcoin and we talk about the market correcting or the market hitting all-time highs and correcting, I mentioned the example of the Michael Saylors and the Kevin O'Learys and the Elon Musks and the Chamath Palihapitias who own a considerable percentage of the total market share of Bitcoin. By the way, guys, I did enter this trade in case you guys didn't kind of put that together before we got on. 17,887, no entry unless there was a rejection. Very clear rejections here. And I think that we see at least TP1. If the market wants to reverse, that's its prerogative. But I do believe we can get a TP1 here. Chart Addicts members know what I'm doing. No, I am not here trading on the 1-minute chart. I am not here trading on the 1-minute chart. What I'm doing is identifying the real low. Beautiful. Okay. Any questions, comments, concerns? Questions, comments, concerns? Roy, where's TP1? Right back at 18,000. Really doesn't get much simpler than that. And then last but not least, throw out a zone. Good luck. Beautiful. In case you guys missed it, yes, we ended up making it to the New York Stock Exchange. All right. If you guys are just tuning in, welcome. All right, so we've announced the opening speaker for the FX Summit 2024 conference in Dubai. The opening speaker is none other than the Einstein of Wall Street himself, Mr. Peter Tuchman, 38 years of experience on the floor of the New York Stock Exchange as a broker, trader, and everything in between. His wealth of experience is invaluable to a conference like ours because, guys, I'm not talking about, okay, this guy is the Warren Buffett of floor trading on the New York Stock Exchange. It's bigger than that. It is how many cycles has this person seen? This, you're telling me the guy was trading on the floor during the crash of 87. You're telling me he was there during the dot-com bubble, the tech bubble in '01. You're telling me he saw and traded the '08 financial crisis and he's still on Wall Street? You're telling me he traded the Trump presidency and the China trade war? You're telling me he was there during COVID? That's the wealth of experience I'm talking about. Very excited to share his knowledge with all of you and looking forward to seeing everybody in Dubai, November, for the FX Summit Conference. Another reminder that the 3-day mindset bootcamp is going to be on March 7th. There's been a date change. It was supposed to begin on Friday. However, we have moved the start date till Thursday. We're going to be doing 3 days intensive masterclass and bootcamp to get you ready for 2024. We're already 3 months in, people. If you haven't gotten activated, if you haven't started to reach the momentum that you're looking for, if you haven't built a good enough system or a schedule or some goals for yourself that are holding you accountable and you're making progress, this is for you. Do not underestimate how important mindset is for achieving your goals. I showed up here this morning. I'm ready for battle. This morning, I am ready for battle. Anything could happen on the charts. I am ready. So it's not about pure technical skill. It's not about pure, how do I say this? What's the word? Like self-policing. Like you can't just like willpower your way through fucking everything. You have to build good habits and good systems. And if you don't know your weak points, if you don't know what questions you're trying to answer about your life, no matter how much cold plunges and fucking red light therapies and all this dumb shit that you do, you will not activate. Asking some very important questions and becoming introspective about the reason why you're doing the actions you're doing. Why the fuck are you trading? Why are you putting yourself through all of this? Understanding why you want your goals and what you're doing this for is the key. So the 3-day class is going to be number one, focused on kind of unraveling the bullshit in our lives. Number two is going to be, day two is going to be focused on now resetting a new path forward with these lessons that we have. And day three is going to mostly be focused on trading psychology, how to set up a good trading system to eliminate the psychological barriers that most traders face. So if you're looking to get active, if you're looking to get your life on track, scrolling on socials, watching the next fucking ICT YouTube video, guys, there's not time for this shit. You have a family, or you're gonna have a family. They're watching. They're waiting for you to get your fucking feet moving. All right, I know it sounds like, oh, like sign up for this class. I could give a fuck who signs up for this class. But everybody here knows that those of you that have been through any mindset training with me or through Chart Addicts, you guys have come out better on the other side, not just in trading, but more specifically in your daily life, which then bleeds into your trading. Okay? If you've taken any mindset classes, or if you guys have been through the morning mindset calls, drop your opinion in the comments section on YouTube so that other people can get a good idea of, of what to expect. What's your expectation for the Fed taking into consideration the economic reports? What are you talking about? Meta being down, this ain't a coincidence. Okay, so guys, uh, social media platforms go down sometimes. Is it a hack? Is it the app is falling apart and no one knows what's going on? No one knows. Okay, we'll hear the reports. I need you guys to all do me a favor. When, as a trader, I need you guys to get away from the same mindset and same thinking that plagues the majority of people on social media, or that just plagues the most people in general. Most people just want to gossip. They want to know why. So the market moved because Jerome Powell said something, and what we need to justify and rationalize every action, everything, just to try to make it make sense. Here's the secret, people. It ain't always going to make sense, and you will not be able to pinpoint the reason for every market move. So why try? Why make that even part of the equation? The biggest question I get as a macroeconomic, as an economist and as an analyst is, why did the market do this thing today? And then you go into group chats, and then all you see is people trying to rationalize it. Actually, it's because the Bank of Japan did this. Well, no, actually, it's because the rates and it's forward looking. And it's good to put a reason on it. Like for me, that's why I try to stick 30,000 feet up. Okay, because I'm not looking at NVIDIA dropped earnings. That's why the market is going up. That's such a naive way to look at markets, right? If you look at the 30,000 foot view, what is the number one driver for NASDAQ? Those of you that took the masterclass, what is the number one driver for NASDAQ performance? Who can take a guess? For some of you, this won't be a guess because but
Corporate earnings,
what was it?
corporate earnings, and FOMC.
Yes, so interest rate decisions, but specifically it's liquidity. Exactly, Shan. Money printing is liquidity. It's the amount of available money in the system that's sloshing around. If there's too much money in the system, typically we see asset prices go up. If money is more scarce, we tend to see economic activity and asset prices go down. So liquidity is the number one engine driver for NASDAQ. What drives liquidity? There's market sentiment, there's monetary policy, and then there's actual fundamental performance of these stocks, the underlying names in the NASDAQ. So earnings season is upon us. We've already had a bunch of earnings reports from Meta and from Google and NVIDIA and Microsoft. So we've already had earnings reports. Things are looking decent on that side. When it comes to liquidity, we're still in a quantitative tightening cycle, but the market is excited for the Fed to pivot and to start dropping rates this year. And so the anticipation of liquidity has been leading to this bullish run. And then you look at sentiment versus risk on or risk off. Bitcoin hitting all-time high should be a very big indicator that sentiment is risk on. People are willing to go further out into the risk curve to find opportunities for returns. So that's why the individual news events, they matter, but not as much as people think. It's important to look at 30,000 feet up. And then it's important not to rationalize every market move because it's a trap that'll get you thinking, not what did the winners of this trade see? People who won this trade or are going to win this trade saw something. We either saw the same thing or we didn't. So instead of asking which fundamental event led to this specific market movement, ask yourself, what were the technical indicators, or what were the price action patterns or the price structure indicators that could have given me an early warning or an early, nudge that this was going to happen? What did the winners of this trade see that I missed? As soon as you start thinking like that, eliminate the whole, trying to be all knowing, your life will change. Can't wait. This is going to be amazing. Had to step out and my laptop is dead. That's a sign, brother. That's a sign. Okay, check US 30. Awesome. Loving these breakdowns. Been following for about a month or two. You don't miss. I enter trades with full confidence. I had to tap in to the VIP membership. Good stuff, Juan. They said monetary policy, monetary policy. So that's what I'm asking, bro. Young, rich. What's your expectation for the Fed taking into consideration the economic reports? I mean, that doesn't make sense as a question because that's the Fed's job. The whole job is to look at economic reports and then make decisions. So the question is, which economic report are you talking about? There's labor reports that came out. There's inflation reports that are always coming out. There's reports on consumer spending and just GDP in general. There's reports about housing prices and housing sales. Like, which report specifically are you talking about? Kindly help me to tackle with Wix. Wix hit my stops and then go to take profit. Well, it seems like you just don't have a good strategy, my friend. If you have a good execution strategy, takes into consideration the wicks, the liquidity grabs, the stop hunts. And so trading is not just zone to zone identifying zone to zone prices, guys. Okay, once you found the zone to zone and you're like, oh, I'm going to enter at support. Okay, cool. The next step is understanding how you're going to structure the trade, risk and reward wise, so that you can take advantage of whatever you're seeing. And then even when you've identified the risk and reward and you've done all the theoretical stuff, when the market gets to your entry, there's still execution strategies that you can use to minimize your risk, like scaling in. So if you're getting stopped out and the market's going your way, you don't have a clearly defined strategy yet. For the CA members, we have a saying all the time. Ah, shit, like that. Sometimes you know what? I'm just going to give out all this. I don't give a shit. So if you keep entering prematurely and then the market goes your way after kicking you out, somebody tell me, what is the easiest thing to start doing? Because I've been through this, by the way. I've been through every single mistake that you can make in trading, and this is how I overcame it. If I'm entering early all the fucking time, and then the market hits my stop loss and then goes in my direction the majority of the time, what do you guys think I should do to adjust? Chris said re-entry. Chris, I think you're missing the point. Momo says enter at your stop loss. Ha, exactly. This is why the whole saying that we have is your stop loss is my entry. That's why. Smart traders are looking for the liquidity. We're looking at where most people would put their stop loss, and then I'm just going to put my entry there instead. And how do I come up with this conclusion? Well, from years of entering early, or not years, probably like a year, because you go through steps. First, you don't have a system. You're just always trading something random. Then you have a system, but the execution is trash. Then you have a system, you understand how to execute, but you're impatient, or the psychology starts to play in. And then eventually, you start to realize exactly what you should be doing. You're not entering prematurely. You're not entering too late because you're scared. When the market does exactly what you're looking for, then you take advantage. And if you don't know exactly what you're looking for, that's the first problem. How do you know? If you don't know what you're looking for, how do you know when it shows up? It's like some of you trying to find a significant other. You're not clear about what you're looking for, and so they might show up, smack you right in the face, and you won't even notice it. Okay, what kind of life do you want to lead? What kind of success do you want to have? If you don't have a vision or a goal, how the fuck do you know when you reached it? How do you know if you're headed in the right direction? Clearly defined systems over everything. Are you heavy in Bitcoin or still waiting? So I haven't bought any Bitcoin since January 14th. So I used to have recurring buys every Friday. No longer have those open. I'm kind of waiting for a pullback now. Let's go around the horn real quick and see what the markets are doing. So all-time highs got reached. Profit taking is in full effect. We're going to have to go up to the weekly now. All-time high has been hit. We're about a month away from the Bitcoin halving. And what I would personally like to see is some sideways motion, a potential correction back to the 30s and 40s. November, July, right here, November. And then sometime around November, we begin the next bull run. And then about a year after the halving, this is typically when we see new all-time highs created. Okay, so this is kind of my timeline for this year. If we just keep going up in a straight line because of the overall demand, it's not going to be good. All right. The whole point of crypto is that this is where it's a great equalizer. Folks who aren't already rich can grow. It seems like institutions are going to be benefiting the most from the Bitcoin pump since they're the largest holders. A lot of people had already sold off their Bitcoin in the last few pumps and maybe weren't buying as much. So the reason that I want the market to keep correcting is to give the average person the opportunity to buy as much as possible to even out this playing field. So what I'm doing right now is I'm buying altcoins to compensate for kind of just like no activity. And I've been taking a little bit of profits from Bitcoin and converting it over into the altcoins. So instead of having to put in new money, what I'm doing is I'm looking at the conversion and I'm only buying altcoin. I'm looking at the conversion between Bitcoin and altcoins, and I'm only buying altcoins that are sitting on the floor. I do not buy hype. I do not chase the market. I know that Shiba Inu had a massive run, but for me personally, I believe in value over anything else. So these altcoins that are even small caps, which have the potential to see 50, 100, 200x returns, those are kind of the opportunities I'm looking for right now. Okay, because how much money am I going to make buying Bitcoin at 70 grand? Right. So it's the 30%, if it goes to 100K, that's not my game. 30% is not my game if I'm buying crypto. Too much risk for that amount of reward. But let's look at, let's say, well, I mean, Solana is pumping right now too. Take any coin that's sitting at under $1. If any of those perform well, you're looking at least 10x, 20x, 30x returns, depending on the market cap. So pull back on Bitcoin to be expected. I think we're going to be headed back to the 62,000 region for now. Whether we break this low or not is going to be up to the markets, but I would love to see the market start to correct. If this thing just keeps pumping to the upside, unless there's a recession, we're not going to see a sell-off because institutions are going to keep buying. But if we go into a recession and they're laying people off, there's a good chance they start selling some of the Bitcoin in order to, make up for the losses they have in their business. All right, good stuff. So gold, we talked about gold for, I don't know, I've been screaming about gold since December of last year. 1995 got hit, both TPs got hit, and now the market has completely crushed to the upside. Personally, I was looking for a pullback and continuation. But like I said, if we begin to fill this wick right here, then we're going to be headed all the way to the upside, like all the way up to the top of that wick. And this happened way sooner than I thought. But now what do we see? We're at the correction level 21.29. So what I'm seeing is a correction on gold back to 2080s. All right, potentially even lower to the 2065. Correction back to the previous highs, break through the previous highs to grab liquidity, and then continue to the upside. So correction on gold, we're very overextended. We're very close to the all-time highs for gold right here, which is 2150. And the market came pretty damn close. I told you guys commodities are going to have an incredible year this year. And safe to say, the markets did not disappoint. Okay, potential sell opportunity, not even potential. This is a sell opportunity on gold if I've ever seen one. Beautiful rejections to the upside. Your entry would be right at the body of these candles. Stop loss 20 points above the previous high. And then take profit at 2088, which would put us at about 2.3 to 1 R on this trade. If the market can pull back one more time, if you guys want to put a sell limit at 2130 instead, you can increase the R&R up to a 2.7. So it kind of goes from 2.3 up to 2.7. Big difference there. Max, your SL is my entry. You already know. You already know. I see you, Mike. Don't move your SL too early. Big Mike Pineda in the house. Mike, we got our podcast dropping this week. So we got a ton of feedback to, why don't you just interview your successful students and just let them tell it? Like, why don't you just have a full conversation with the folks that are winning and then see what they're doing and see how they're taking advantage? And that's exactly what we did. So I have a ton of these podcasts dropping. We've already started putting a few up on the website. I have a podcast with Dr. Olson, the founder of Oanda, dropping this week. And then we also have the New York Stock Exchange vlog and the podcast with Peter Tuckman, 38 years of trading experience. I had him review my NASDAQ trading strategy. And I had him review my top 10 rules for trading NAS and give me his perspective from 38 years on the New York Stock Exchange. And ladies and gentlemen, he did not disappoint. He did not disappoint. Gave us some serious gems. All right, US 30 made it to TP2 and now coming back in. Look at the 886 from the previous low for my US 30 traders. That should put you around 38,500. I'm not going to get the exact price because too much sauce for one live stream. Triadics members, you guys can do the math. You guys know exactly what we're looking at here. UJ hit our target and has just been hanging out here since mid-February, since Valentine's Day. All right, so depending on what the DXY does, which personally I'm still bullish on the DXY, which means UJ could have a little bit more room to go. I see one more push on the dollar before the correction. I want to see one more pump up to the 105.8. Okay, you guys know magnets don't lie. The magnet indicator is the single greatest tool in trading history in the world known to mankind. They'll write about this in tablets, Rosetta Stones, and of course, you know, the history books. Magnet indicator and the 886 do not lie. Super secret magnet indicator never dropping. Said SPY is dropping. Yeah, it is. I've been holding Shiba from the lows. It has potential. Don't overstay your welcome is my advice for the altcoin market. All right, so do not marry an investment like that. I marry Bitcoin because it's one of the greatest technologies we've ever seen. From a technology standpoint, it can be recreated. Yes. From an asset standpoint, it's the single greatest asset the world has ever known and the world has ever seen. So I'll believe in an investment like that. But if I'm going to be buying Shibas and if I'm going to be buying altcoins, as soon as I see the pump, I am securing profits. I'm not here to like pretend to be, diamond hands and all this dumb shit. Diamond hands is another word for fucking idiot. Okay? Just keep that in mind the next time that this hype, because the Bitcoin hype and the crypto wave is starting to come up, and you're going to hear a lot of people like, I'm never selling diamond hands, diamond hands. Diamond hands equals dipshit. If somebody wants to make that shirt, diamond hands equals dumbass. Cool? Only because a lot of these altcoins are completely useless as assets. There's 50 other alternatives that are better, cheaper, more professional, better teams. Let's take Shiba Inu. Let's take Doge. Doge is a cryptocurrency. The difference between a cryptocurrency and a cryptocurrency is its own chain. It runs on the Dogecoin cryptocurrency chain. It has its own ledger. It is its standalone cryptocurrency. Awesome. So is XRP. But XRP is faster, cheaper. You can send way more, more well-recognized, much more professional team. So why would you use a Doge versus an XRP? You wouldn't. Nobody in their right mind would. Right? Now, Elon put his name behind Doge, so maybe that's a good one to buy. People typically just go to the familiar. That's how people vote in America, too. You don't even vote for who you want. You just vote for the name that just pops into your head, the one that just stays top of mind. And so Dogecoin has a big future because when the altcoin pump happens, the FOMO buyers are going to think, oh, which altcoin should I buy? Well, I don't know shit about altcoins, but I've definitely heard of Doge before. And they'll just pile into Doge. So there's certain opportunities where you can look from a mile away and know that they're going to get the inflows. However, when you're talking about value investing and long-term investing, you want to look at value is the difference between the actual benefits of this asset, the actual market value of this thing versus what the market is pricing it at. So if you see a $500,000 Lamborghini, okay, and they're charging $100K at the store for this Lamborghini, there's a value here of $400,000 between the market's price and between the actual price of the asset based on your assessment and based on the fundamental factors that impact price, which is supply and demand mostly. So when you're value investing, you want to look for something that actually makes sense, something that actually has value, but the market is underpricing it. The market thinks it's useless. The market is just like, we're not paying attention to this. Let's chase hype. Those are the single greatest opportunity. Warren Buffett didn't own the airlines until COVID happened. The airlines went to zero, and then he bought them. Value investing 101. If you guys want to know more about value investing, which is the philosophy that helped Warren Buffett become the greatest investor of our generation, read Benjamin Graham's book, The Value Investor. Benjamin Graham is Warren Buffett, as well as others. It's Warren Buffett's mentor, and he was his professor for a while. And Ben Graham is the kind of the face of value investing. So there's only one investment book I'd recommend, and it's just Value Investing by Benjamin Graham. I think people who are newer to markets have a better shot of being successful because some of the experienced folks are like, oh, yeah, that makes a lot of sense. Value investing, yep, that makes sense. New folks are like, you're telling me I got to go read a whole book just for someone to tell me to buy shit when it's cheap? Like, I thought that was obvious to everybody. And you would be correct. Stick to that not naivete, but stick to that sort of oversimplified understanding of markets. That's going to make you rich. You don't have to be Warren Buffett said this. If you have 160 IQ in investing, you might want to leave 40 points at the door. You definitely don't fucking need them. You're going to find some way to talk yourself out of every great opportunity. You have to dumb yourself down. You guys know, I know a lot more than I'm giving off on these streams, but I try to simplify everything so that we can actually make sense of what's in front of us. You guys get it? Same with trading. When I say a binary choice, like the market is either going to close below here and go down, or the market is going to close back above the support and go up. Obviously, it's an oversimplification. The market could be in an either wave. We could be doing a corrective wave for continuation. We could be doing a liquidity grab for a recovery. So there's nuance, yes. But imagine imagine we just stuck to the very basics of this binary choice, either bearish or bullish. And you find a key level that is that determining factor, kind of like your last line of defense, which is usually the local support, the previous low from that impulse. We break the previous low, by definition, we're no longer making higher highs and higher lows. Now we're making higher highs, but lower lows, which means we should hold off on continuing to buy the falling knife. Make sense? Keep trading simple. Anyone that tries to convince you to overcomplicate it is trying to get you to lose money or trying to sell you a gimmick. Understood? Put a 1 in the chat if it's understood. He said, diamond hands, people catching strays. Yeah, I mean, look, would you rather get insulted by me and have a wake-up call today, or be disappointed like I was in 2017, seeing multiple six figures on your screen and not taking profits because you think that you're going to be a millionaire and drop out of college and no one can tell you shit, and then it all comes crashing back down and you feel like an idiot? Which one do you guys think is more painful? All right, so take the words, right? You can turn off the stream, you can mute it if you want. You cannot mute your balance back after, not taking profits. Cool. Awesome stuff. Altcoin market gearing up. Very good chance here that we break through. Typically before Jerome Powell hits the stage, the market will do a correction to try to let off a lot of steam. Because typically whenever Jerome Powell gets in front of the camera, you see a bullish market. I don't know what this phenomenon is, unless the stock market participants or the largest banks are mad at Jerome Powell, they will purposefully kind of make him look bad by selling off during his speeches. But if you look at, like, let's say, if you guys want to do this exercise, this fun exercise, look at the last 25 TV appearances by Jerome Powell, and then look at the market reaction every time. It's green. When you're covering Jerome Powell on Bloomberg, and all you see is green arrows for S&P 500, green arrows for the NASDAQ, green arrows for the Dow Jones. Kind of makes it look like things are not too bad. But before they can just keep pumping the price up, they kind of have to convince a lot of sellers to get on the other side of the market, which is, I think, why we're seeing such aggressive selling ahead of Jerome Powell's speech. People, again, new traders or just folks who are just not well versed in how market news actually impacts prices, they'll tell me, Oh, they're expecting Jerome Powell to say something negative. Hold on. That's my bad. I'm alone here at the crib. I just heard a massive crash in my living room. Give me a second. If it's an intruder, say a prayer for him. I'll be right back. All right, I'm back. It was Amazon delivery. This dude like threw the box at my door. That's crazy. Talk about fast service. All right, so yeah, big reason for the sell-off. Market could be enticing a lot of people to get on the opposite side of this trade, to start getting into sells. As we start breaking some of these key levels, we start looking at massive sells. And then tomorrow during the news, we could see a recovery. I did mention a few reasons why I was skeptical about how high the market was. Does anyone remember the key reasons that I mentioned for why we could see a genuine market sell-off in March? Because I mentioned March specifically. How do you feel about countries like El Salvador using Bitcoin as legal tender? Do you believe other small countries will follow? So, Juan, first off, I don't want to butcher his name, but Bukele, the president of El Salvador, absolute G. Okay, so the Bitcoin model for a developing nation is not for everybody. I think it's important to remember that a lot of South American countries, as much BS as they're dealing with. Wait, Bukele is the president. Let me just make sure. Okay, yeah, I just had to make sure, guys. So yeah, Bukele was the one who initiated the legal tender. And what they did was, this was around the same time that Michael Saylor and Elon were turning their corporate treasury assets into Bitcoin to hold as opposed to cash. And I think everybody understood that the money printing operations of the Fed to pump trillions of liquidity into the market post 2020 was going to be the destruction of the dollar's value. Now, even though the dollar is bullish, because again, the DXY is not just the dollar performance, it's the dollar versus the basket of all the global currencies. So if all the other currencies are doing worse than the dollar, you'll still see the DXY go up. That doesn't mean you want to be holding dollars in your bank as an investment. Okay, it just means you're going to be screwing yourself over. So then what does somebody like El Salvador do? Can they buy US real estate? Not as much. Can they buy foreign stocks? Sure, but are they going to perform well? Not as much as Bitcoin. So they bought an asset that was inflation resistant. And so while every other country was still borrowing in dollars, and El Salvador does have a lot of dollar debt, by the way, which is the biggest issue for developing countries, is that your currency is going to shit, but your debt is in dollars. And that interest payment on the debt is in dollars. And it's just getting more and more expensive in your local currency to service that US denominated, the dollar denominated debt. So what most countries end up doing out of desperation is overprinting their currency, their local currency, to pay back this interest, further screwing the people and further screwing their ability to recover. So when we saw El Salvador buying Bitcoin, it was more of a kind of like a very smart move because Bitcoin is going to outperform the dollar tremendously. And then you can just sell off profits and to pay your interest payments on this on the dollar debt. Like it's fucking genius what he did. Like the more I think about it, and obviously it's not going to make sense until let's say Bitcoin hits 100K, but I think this will be one of the best decisions that a head of state has ever made for their country in a time like what El Salvador was going through. So seriously genius. I did have a meeting once with a few important people from the finance ministry in Lebanon to try to, this was back in 2019, I think. And I was trying to pitch them the idea of using Bitcoin to try and get around the fact that the central bank didn't have enough dollars to give the lira value and to see the implications. The issue with Lebanon is that our electrical grid could not handle the Bitcoin mining operations. So Lebanon has 6 hours of electricity at a time for a total of 12 hours a day. When I was growing up there, you basically you wouldn't know which 6 hours you had that day. So you'd come home from school or from work, and if you lived on the sixth or seventh floor of your apartment building, you would see a light outside. If it was on, you knew you had power. If it was not on, you knew that you had a long fucking walk up every day. And so the grid couldn't sustain it. That's why Bitcoin for the Lebanese economy just wasn't plausible, even though it would solve all the problems, such as the US debt, the dollar denominated debt, as well as the foreign currency debt that we have. So pretty genius stuff on their part. It's the same in South Africa. Exactly. We need a president like him in Haiti. Sandra, I agree 1000%. Haiti, if Haiti had a president like Bukele or like Milei in Argentina, my God, would that be a change? Same with every other country. Every other country needs to get their fiscal responsibilities back in check. All right, so I asked the question right before I went on this explanation of what were some of the key drivers that I mentioned that were going to lead to a potential market correction in March. And I see Chris Brown is the one that got it. Chris, great to see you, bro. Chris was in the master class with us. Sellers like Bezos, Mark Zuckerberg, etc. Yes. Everyone's like, well, Roy, are those big names selling? Is that really enough to drive the market? Or don't you think the largest institutions in the world are smarter than that? And they can see past, Bezos selling stock that he already pledged to sell? And the answer is no. The answer is that markets work on a basis of follow the leader. Same with trading, by the way. It's what a lot of you guys are doing here. Some of you that don't interact, or some of you guys that just aren't interested in being a trader, you kind of just want the answer to the exam. What usually happens is everybody wants to find the person who's always right and then use them as confirmation. Okay, so you have a crowd of folks. Now, the problem is that most people just don't know who the leader is. So it becomes this giant game of follow the followers. This is my issue with most group chats in the trading space. You have a lot of folks who are not well versed in a strategy, who aren't that competent in terms of trading, and they're all just it's the blind leading the blind. And same thing happens in financial institutions. Every day they're trying to figure out who the leader is. Oh, it's JP Morgan. They said this. And so I think that this is the way the markets are going to go. No, they're not the leader when it comes to this market movement. So that's why you have to become your own leader, people. Because if you're going to play this game, you're always going to be chasing your tail. And this is where all the problems in this is how markets move, basically. You have this leader who sees a discrepancy in the market between where the market is and where we think the market should be. Okay, this is me. I'm going to make myself the leader right here. You got folks that'll be like, there's somebody else. Okay, imagine I'm on a 3-trade losing streak. Okay, a new trader is going to be like, I don't think Roy has it. Roy might not know what he's doing. But this guy's been winning all week. So I'm just going to start following what this dude's doing. And then this guy back here doesn't know about any of these people. They just know this one person. So they're here following this guy. They're here following this guy. And it becomes a giant game of telephone. All right? Where I say something like, I don't know. Imagine I just say some random shit, like the word, like the phrase show and tell. Okay. This guy overhears me kind of, and he's like, oh, Roy said sell. Okay. And then this other person is like, oh, this person's selling, so I'm going to be selling as well. I said show and tell because I'm out here buying. Okay. Let's just say I'm buying. This guy says show and tell. Okay. I think he said sell. I saw his markup. I think he was looking for a sell. They sell it. This person's like, oh, the markets are bearish because this person's selling. So now this person has a bearish market sentiment. Okay, now they're kind of stuck on that bearish bias. And everybody else doesn't even know. They're seeing a lot of people selling and they're like, well, these guys can't all be wrong. The truth is, the consensus is usually wrong. That's how we make money. The whole point of an edge is when everybody thinks that the market's going to break through and you're like, nah, I'll buy it here. So like 90% of traders would be selling as the market is dropping. So that means if this thing does go up, 90% of people will be wrong. The consensus is usually wrong. They're usually directionally correct, but when it comes to the entry and when it comes to the actual execution, no. Most traders are usually wrong. So that's what institutions do. Big game of follow the followers. And when I worked at Bank of America, when I worked at Merrill Lynch, the Bank of America research team, the COI, the CIO, excuse me, the Chief Investment Office in New York, this is a team of 100 PhDs that spend all day, all night looking at macroeconomic analysis. Bank of America has the largest amount of consumer accounts out of any commercial bank in the States. So they had the ability to see how many mortgages were outstanding, the level of credit card debt, the savings rates for most Americans, the spending and consumer sentiment. They had all this data, and they were still wrong all the time. I know, because I'd hop on these calls for the Chief Investment Office. And I'm like, okay, I'm going to write down these notes. I'm going to use this stuff to trade. And these calls are public. I'm going to use this information to trade. And I was wrong every time. Here's our quarter end target for the S&P 500. And guess who attends these Chief Investment Office calls? You have Goldman Sachs. You have Wells Fargo. You got JP Morgan. You have the largest financial institutions in the world that are on these calls listening to Bank of America, the followers leading the followers. And they all have similar targets for year end or quarter end for the S&P 500 and for NASDAQ and for gold. And they're never right. Okay? So be the leader. Learn how these markets move so you don't have to depend on anyone else. Because even the smartest and the most well-versed financial institutions are very wrong because the markets are not moving as they always have. Normally, the currency correlations were very simple. Gold goes up, dollar is dropping, NASDAQ is going up. Okay, then you have different correlations, let's say treasury markets. So bond prices go up, bond yields go down, stock prices go down. Okay, this was the traditional correlation. Bond yields are going down, which typically is associated with lowering interest rates. When bond yields are dropping, typically the price of the bond goes up. When you lower interest rates and bond prices are going up, typically you have stocks going down. This is the traditional correlation. Now we've seen in the past 3 years, stocks and bonds, stocks prices and bond yields going up at the same time. We've seen long-term treasury rates paying back lower than short-term treasury rates. These are correlations that did not exist before. And then they have the introduction of Bitcoin, which kind of puts a wrench in the traditional correlation, sort of like matrix. Because gold used to occupy that safe haven asset space. And then technology stocks used to occupy that high risk, high return, high beta opportunity. Bitcoin has become a combination of both. It's become an inflation hedge. So it's kind of more like an insurance policy against the dollar, not against dollar collapse, but just against the dollar continuing to lose value over time, which it will as they keep printing more. But it's also a speculative, high return, high risk asset. So it's kind of in this middle ground between this. It's a combination of the tech stocks and the risk and return that those come with, and the safe haven properties and sort of that, hedge property that gold brings to the table. And so Bitcoin, I think, is like this big wrench that's been thrown in our understanding of correlations and stuff. So be adaptable as well. Be adaptable, be adaptable, be adaptable. So much sauce today. If you guys are finding any value in this session so far, please drop a like on this stream. Don't be a bum. It takes 2 seconds to drop a like. It takes me serious mental capacity to break this shit down in a simple and easy to understand way. So I'm going to ask if you guys just drop a quick like on the stream. It'd be greatly appreciated. And of course, drop that subscribe if you guys are not already subscribed. He says answers to the exam. Exactly. This goes with trading algorithms. Once everybody starts using it, it becomes unprofitable. Yeah, more or less. Said once everybody starts using it. Kind of. This is like the whole thing about ICT, for example. Everybody's saying like, oh, because the knowledge is now out there because of how this algorithm works, that it's going to stop working. Okay, take every single follower from ICT and add up all of their account balances. Take a guess, guys. What do you guys think that number would be? What is that? What would that number be? And keep in mind, after the first week, 60% of those accounts will be blown anyways. I would say whatever the number is that came to your head, it's too small for the market to give a fuck about. They'll care because that like if everyone is taking the same trade at the same time on with leverage, that could move market price. Is it enough to get them to change the algorithm? No. Where do you get this stuff? Now, will the algorithm change eventually? Yes, because they have these risk models that will tell them if this current market distribution algorithm, this price distribution algorithm, is going to continue to be profitable or efficient for the markets, or whether there's a more efficient model that they can use. And I think once they find the more efficient model, then there's going to be this period of shifting over and everybody kind of getting used to it. Right? 2 years, 3 years, 5 years, who knows? Right? The only way that we'll know is by studying our trading results and by trying to identify exactly where the inefficiency is. If I'm using my strategy and then I just realize after 2, 3 weeks, every trade I'm taking is hitting stop loss. Losses are normal, but once it gets consistent enough to where the strategy is now an issue, you have to go and revise the strategy, backtest the market, and see how the market is changing. Is the average weekly range from top to bottom getting wider? Is the average range on the daily getting wider? Is more volume coming in? Is the market still respecting the same structural levels? Is the market still respecting all the same, or whatever your entry criteria is, like let's say Fibonacci, whatever, moving averages, is it still respecting those? Okay. Good stuff. Good stuff. Is that after he got abducted or before? All right. I am going to be very respectful this year, right? If I see some shit that's just absolutely horrendous, trust me, I'm still calling it out. I don't give a fuck. I have been that person and will continue to be that person, regardless of the pushback and scrutiny and sort of the problems that I've had over the past 2 months. Okay. But I'm not gonna I'm not gonna be calling people out by name just so they can catch strays when I was not mentioned and there was nothing said. I started to realize that, as funny as it is, using other people, like dragging other people who have nothing. I'm very confident and comfortable talking shit to people to their face, but I've never been the person to talk about somebody behind their back. So from now on, guys, any of this gossip stuff, if they said something first, wow, God help them. But if, yeah, that's where I'm going. Are you in NAS? Yes, I am. The bank loans end. Marksman J also answered that question from earlier. Love to see it. So the bank term funding program might be coming to an end. Here's the thing. There's 3 regional banks right now that are dealing with a similar problem as First Republic and Silicon Valley Bank. There's a few banks in New York that are dealing with some liquidity issues. So just like I said, most likely if the Fed gets in trouble, they're going to print money or they're going to extend the bank term funding program and just keep these facilities open to stop these banks from going under. That's probably what's going to happen, right? Kind of watching Jerome Powell, watching how he moves, reading the Fed meeting minutes, it's become very clear that they're going to bail out the banks if they need to. Also, there was a big kind of like part of Jerome Powell's statement going into this year that the U.S. banking system is strong and resilient. And this was kind of like one of those inflation is transitory kind of catchphrases that they tagged on to Jerome Powell. If you see in the last 2 or 3 appearances he's had, he's completely taken the banking system as safe and sound, or whatever he said. He's completely taken that out of his speeches. And that goes to show, obviously, he don't want to look stupid by being wrong. So it means he does not believe that the banking system is strong and resilient. He believes that there's going to be some structural issues coming and that, the bank's going to bail them out or the Fed's going to bail them out. What the hell is this so slow for? Guys, it's noon at this point. There's going to be liquidity. A lot of you guys don't know about session times or about how the session is broken up. I'll give you guys a quick kind of rundown. If you've taken a master class with us, by the way, hundreds of people have taken the NAS100 masterclass. You should have received an email to register for a free, that's right, damn it, free review session. We already had a free review session earlier this year to kick off 2024. We are doing another one. Why? So that we can look at which of the three models is the market using the most this year. How do we adjust our scaling strategy to adapt to market conditions? How does trading futures differ from trading CFDs, which is obviously a big point of contention today? So if you guys, it's a free masterclass for everybody who's already taken the NAS class. Please, please, please register your name through the email. If you didn't get the email, check your spam. It might have landed there. Make sure to register, guys. You do not want to miss this class. Shan, that was funny as shit, bro. You really almost dragged me into the deep end. But I'm a new man. I'm a better man because I've had some self-reflection and I will be better. Okay? Almost got me cooking somebody off the early. So yeah, session time, just to kind of break this down, NAS class, folks, we're going to go into very heavy detail about this tomorrow. But there are times when the market pumps liquidity or liquidates a ton of orders at the same time. This is where we see volume come in during these key times during the session. When I was at the New York Stock Exchange talking to Peter, 38 years of experience on the New York Stock Exchange, I talked to him about these session times, and he confirmed how accurate this was, and it made me really happy. Okay, keep an eye out for that vlog. We'll be going through it. The majority of the vlog is kind of him giving us a history lesson on the New York Stock Exchange. He really is passionate about the role of the NYSE and how important and structurally significant it is to markets and the evolution of markets. But we did go into kind of a review of top advice for traders. He deals with retail traders as well as institutions, so this is going to be huge. Looking forward to that. 12:20 to 1:20. This is a session that I call lunchtime. Okay, so traditionally before the automated quotation systems and before electronically controlled networks, ECNs, which would basically batch orders of buyers and sellers and just match them together automatically, there was physical trading going on, brokers, market makers, floor traders, etc. 12:20 to 1:20 was typically seen as that lunchtime, quote unquote, very low volume session. For us, this is the overlap between London, which ends at 11 a.m. Eastern, and New York, which opens at 9:30. So from 9:30 to 11, we have this high volume, this 1 hour and a half of high volume between the overlap of these two sessions, where you have the rest of the world and the US high volume trading. Then after that high volume session, the initial moves of the market have been liquidated, stops have been liquidated, and the market is ready to make the trend of the day. Typically an hour and a half after, you'll see kind of a dry market. And then there's a second half of New York, which I won't go into heavy detail on, but CA members, I got some sauce for you guys. And this is not something that's, because I don't want to be like, oh, I have some sauce, but you can't really use this to make money. We can definitely use it to make money, but this is just more to understand how markets work, which is how I was asking Peter the advantages of being an institutional trader or being part of an exchange as opposed to just being the retail trader at home. And he was explaining to me that they get some leeway. When the markets close for us, they don't necessarily close for them. They get to see some open orders. They get to liquidate some things at the end of the day and still make guaranteed money. Oh, I can't wait to share this stuff with you. These guys have it made. They have a money printing machine. The next time I sit with Peter and his mentor, David Green, who is a master technical analyst, he was a floor trader on the New York Stock Exchange as well. And he traded for some of the largest clients in the world. He did trade for Bank of America and IBM and some of those big companies, and Coca-Cola and the rest. So they would call him and liquidate $100 million worth of shares at a time. But he trades technical analysis. He uses technical analysis. He uses the same exact shit that I use, and it blew my mind. Talking to these guys made me realize how good, like how spot on we are. We are in the right direction. They use EMAs and moving averages. So one of them is more leading, the other one is supposed to be lagging. And then they use Fibonacci and maybe a volume indicator, but they really just stick to those two mostly. And I'm like, dude, I love this shit. Did you just say free? Oh, yeah. If you took the masterclass, if you took the October, November, December, or February master classes for NAS100, this is for you. Absolutely free. Do not miss out on this. I charge over $750 for an individual session to do a one-on-one. And even that is cheap. For this to be free, to go through the detail I'm about to go through, I guarantee if you miss this, how do I say this in a respectful? No, if you miss this, you're a bum. However, if you're busy, you have a family, you have work, you're traveling, you're sick, the recordings will be posted for you. So you don't have to be there in attendance. Register your name at least. If you can't even register your name to get this information, you're a bum. That's my God honest take. Cool. Ladies and gents, I'm about to hop off here. The reason I did that whole spiel about lunchtime is that it is 12:20. I'm not expecting immediate market reaction. We're going to have to wait over the next hour. Two options here is the market is going to break through and then recover, or the market is going to push up and then break through. I would very much like to see one more retest down and then a break back up. That would show me that sellers at least tried. Like, give it a try, kid. Give it a try, sellers. And they at least tried. Then buyers put them in their place, which shows us that buyers are still in control. Okay. Any final questions before we hop off? I know that there's some key news that we have not covered. There's a lot of market news, and there's a lot of news that's political that could affect markets. Donald Trump is back on the ballot in Colorado. The Colorado Supreme Court's decision to just be a bunch of pansies has backfired, and the Supreme Court has ruled in the favor of the former president, Donald Trump, for his right to run for office. Not to hold office or anything else, but they've ruled in his right to run for political office. Yeah, since he has not been convicted of any crimes, they cannot bar him from running. What else? What else? What else? What else? What else? Tons of stuff happening. Tons of stuff happening. We were nearing a peace deal in Israel, but things have started to get a little bit more tense. I think that the last of the support for Israel's right to defend itself is starting to dwindle. So at first, everybody's like, oh, we got to help the Palestinians and we have to help the Gazans, which is very true. What's happening there is absolutely horrendous. But then when you think about the logistics of how ugly this is, you realize that Hamas really put the Palestinians in the shittiest situation imaginable. Okay, so imagine I have my family in my house. I have a very angry neighbor, right? And I know that this person is very vengeful, very vindictive. And so with no respect for my own family's safety, I go over to their house, kidnap a few of their kids, kidnap their wife, burn a part of their house down, and I expect them to not destroy my entire neighborhood. And now the neighborhood's getting destroyed, and there's collateral damage everywhere. Doesn't make that neighbor right, by the way. I'm not saying that they have a right. I'm trying to explain the rationalization for how we got here and why it's so hard for the international community to reach consensus. Because from a 30,000-foot view, there's points on both sides. On one hand, the Palestinians have all the right because these are innocent civilians at the end of the day. But at the same time, they did elect a government. And I'm not saying they elected, I put quotes because Lebanon didn't necessarily elect Hezbollah either. Right? They're kind of a cancerous force on our society. And they have more military capabilities than the government and the military, the national military. So they just basically like barged their way in to avoid a civil war as representation in the government. I would say that the same thing happened with Hamas and the Palestinians. Without a clear fighting force for the Palestinians, they did not have a choice but to kind of give away all authority to this foreign-led militia, this proxy militia. So you have this proxy militia that's hell-bent on, coming for you. And it's a very densely populated area, and they have made a pledge to not stop. So now it's very hard to convince a country that they can't defend themselves and which measures are appropriate in a situation like this. Because historical context says any country that's dealt with this before has retaliated with no concern for civilian casualty. They have just defended their country and continued to fight. So just to kind of understand where we're at today, we got close to a peace deal, and then it started to fall apart quick. Obviously, the Muslim nations, even though they understand that Hamas is a cancerous force, even though they understand that Hamas is destructive and put their people in harm's way and have ruined any chance of peace in the region, they also cannot stand by idly and watch civilian deaths, and they can't publicly support a resolution here with the amount of civilian casualties that have happened. So this is a tough choice where even if everybody wants to do a peace deal, they can't because of the scrutiny. The people, the civilians of those Muslim nations will not allow their leaders to turn a blind eye. And the Western nations as well will not be allowed to turn a blind eye. So that conflict doesn't seem to have an end here soon. It's been going on for a fucking 1,000 years. So why not another 1,000? Ukraine and Russia, that is actually getting a bit closer to a peace resolution, only because the majority of the international community has recognized the Ukraine has a 1% chance of winning. And so at this point, NATO is depleting its military capacity. They are enriching Russia because as gas prices go up, Russia's GDP significantly benefits. And Russia is perfectly comfortable keeping this war going for as long as they need to. So I think that Ukraine needs to come to the negotiating table as soon as possible to save any more of their civilian deaths. The average age of a Ukrainian soldier right now, I think I read this 2 days ago, is 45 years old. Let me make sure I got this right. Average age of Ukrainian soldier. 40 years old. That is not a military age fighting force. Here's average age of U.S. military members. Let's see what the U.S. military is. 28.5 years old, because the youth go in and serve their country. Why is it 40 in Ukraine? Because the youth are no longer alive. They've been killed in this battle over only 1.5 years. The entire population that's supposed to rebuild that country is completely devastated. Does anyone want to take a guess who has the contracts to rebuild Ukraine? Which two financial institutions already have a $400 billion bid to rebuild Ukraine? The same shit happened in Syria, by the way. Continue the destruction so the military contractors get paid. Keep going, because the reconstruction efforts are going to make us money as well. Who owns those contracts? Anyone want to take a wild guess? What does the COT data help with intraday traders? It's just volume. You're really just trying to see sentiment on both sides of the market, buyers and sellers. I'm so excited for this class tomorrow. Carlos, you and I both. Joshua McGinn says BlackRock somehow. Guys, by the way, Josh is in college, right? Some of you guys have been in financial markets for years and years. Y'all couldn't answer that question. Are you guys even paying attention to the news? Josh, great answer. It's BlackRock. The same BlackRock that's been bribing U.S. companies into adopting the DEI agenda and ruining productivity in the States. Great companies like Bud Light and Disney and Target, you name it, have completely been decimated through BlackRock's actions, probably so they can buy more shares. They suck. This same entity that's buying up residential real estate, that's rising, that's led to the rise in prices, because if demand for real estate is low, I mean, demand for real estate is high for homes because there's a lot of families that have not been able to buy a home because of interest rates and housing prices, and they're waiting on the sidelines. I get it. But it's supposed to be an opportunity for the average person to get into a home, a residential property, and own it, and find these bank distressed properties and be able to make some wealth for their family. And that's been stripped away by BlackRock buying up the majority of residential real estate in key areas, driving the price up and kind of creating an artificial floor under the housing market. So BlackRock is the enemy of the people. That's the only way I can describe BlackRock today is it is the single greatest enemy of the people. They own way too much of the infrastructure. They are way too systemically integrated into the government. They have policies that are antithetical to US ideals and to the ideals of the average person. And all they ever do is have this sort of scorched earth, monopolistic view of how to dominate. Now, every company wants a monopolistic structure. You look at Amazon and all the rest. Amazon is not as big in the retail space as BlackRock is in the financial space. Amazon was at one point during the advent of online shopping where they were basically putting every industry out of business, out of their misery. That's BlackRock today. Okay, so long story short, you're the shadiest institutions in the world with open contracts to rebuild these war zones that they are also helping to fund. Do you guys see how fucked up that is? That's not a conspiracy. That's the truth. And the truth is always more boring, but it's also more sinister. Okay, lots of stuff. We talked about market. We talked about market news. We talked about some of the expectations for this week. Took this trade on NASDAQ, which is floating in freaking about 50 points in profit for me. What about you guys? Shout out your entries if you took this trade real quick before we hop off. But we went through the horn, talked about a ton of updates. Make sure to register for the 3-day mindset bootcamp starting March 7th. That's this Thursday. And if you guys were in the NAS100 masterclass, as a reminder, register for the free review session. The link is in your email. Please make sure to register for that. Josh got 17,888. Chris got 17,890. Good stuff. Shan got 17,941 on Top Step. 17,905. 903 with Noah. Good stuff, George. Good stuff, Noah. Shan, Chris, Josh. Good stuff, guys. All right, Juan got 17,895. D got 17,907. Carlos Garcia got 17,895. This is good stuff, guys. Great entries. Great entries. Great entries. All right. Happy, safe trading, everybody. Make sure to protect your trades once price reaches that TP1. Secure partial profits. That's the name of the game, especially if you're switching over to futures to avoid any of the issues with the intraday trailing drawdown on equity. It's best to secure partial profits or profits along the way so you don't allow a full position to retrace against you and violate the rules of the account. All right, so happy, safe trading, everybody. I will see you guys bright and early for tomorrow's live trading stream. I know that punctuality has been kind of all over the place. Keep in mind, we're dropping new videos. We haven't really been dropping content since last year. We just dropped the first podcast with my good friend Jacob Betham, one of the best traders on our team. He was a student turned educator, and now he's making over 5 figures a month trading NASDAQ. Check out that interview on our channel. We'll be dropping the podcast with Dr. Olson this week and a bunch of other student spotlight interviews. Happy and safe trading, everybody. Take it easy. Peace.